time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody, this is the Tax Lady, and this is our hour to talk taxes, and we want to help you. And officially, it's the beginning of tax season. The IRS opens for business on the 20th of January, and all of our offices open January the 15th. So we can get you in, get you started, and as soon as we can, we'll file you electronically. And I'm joined in studio with Tiffany Fabian. Hey, Tiff, how are you doing?
Hey, Esther, good. And I did my first 2014 return. I couldn't, of course, send it to the IRS, but I finished it and got it all done. And he got it done early because he's leaving on the 17th for a 7-week business trip. So it was good to.
And so how did?
get my
And so
feet wet.
there was no problem with the Obamacare piece. He was covered by insurance.
He was covered by insurance. It wasn't insurance through the marketplace, so I had it pretty easy.
Right.
To say,
but I
at
will tell
least.
you, a lot of people are calling now. You know, we've been talking about this for a year and a half, but this is the year with the penalty. So now people are really paying attention. So it was interesting. Yesterday I had a call at the office, and a gentleman said, "Can you explain to me? I don't know what the Affordable Care Act is." I says, "It's Obamacare." Is that what it is?
Light went off.
Right.
Yes.
Yeah. So whether you call it the ACA, Affordable Care Act, Obamacare, it's in the tax law, and your tax return is going to be the vehicle to prove that you had health insurance. And we're going to talk about the if, and, ors, or buts. As a matter of fact, Chris Fabian, who's usually with us in studio, is doing training right now with all of our preparers. And we have been really ripping apart the Obamacare, and we're going to give you some tips on that. So if you have any questions, 803-0930, 803-0930, star 930 on a cell phone. And if you're calling for our location in Florida, the phone number toll free is 1-800-616-9236, or Canada, or any place outside the area, or Georgia. Our phone number is 800-616-9236, and we want to help you with your tax situation.
Right.
Just for those of you that are listening on WGUF in Florida, though, the real feel right here is 11 degrees. Isn't it below?
Below, with
Below.
the wind chill.
It is really
Right,
cold,
right.
but we have palm trees in our heart.
Yeah, and the office there that you're referring to is at 1450 Airport Pulling Road, right across from Tamiami Ford.
Right.
And I wish I was there right now.
Right, if we could teleport ourselves. All right, so let's talk about some of the things that we think you need to know. All right, Obamacare is the law of the land. This year, the penalties they kind of made it sound like the penalties were going to be pretty low, like the maximum penalty per family is going to be $285, but it's the $285 or 1% of your household income, whichever is greater after the standard deduction and personal exemption. So if you made $100,000 and you take off $15,000, you're going to pay a penalty of $850, which is no small potatoes
right.
first year. Next year, this year in 2015, it goes to 2%.
Right.
So, as a matter of fact, I had a gentleman that called me yesterday, and he was saying that he didn't have health insurance. And so I said, what's your situation? And he told me it. He said he can't afford it. He gave me his income. I went to the marketplace. I took a look, and his share, because he would have gotten a big subsidy from the federal government and the state of New York, it was only $35 a month.
Oh, my God.
I said, so really, and it's family plan. So I said, really, the penalty is more than the amount that you're going to pay for insurance. So, we got him signed up. And that's part of what we'll do for you at EG Tax. We don't get anything. We're not going to make anything. We just want to help you. And so if you're somebody that's, when you hear us talk about this stuff and a little light goes off in your head, we want to help you at EG Tax. And again, our phone number here in studio is 803-0930, 803-0930, star 930 on a cell phone. And okay, so starting in 2015, there is the penalties, but here's some of the exceptions. Okay, if you didn't have health insurance for less than 3 months, that's an exception. If you paid for health insurance, it would be more than 8% of your household income. So let's say that your household income's $50,000, and if you had to get insurance through the marketplace, if it's more than if it's $40,000, $3,200, then you're out of the penalty. If you don't have to file a tax return, that's another exception.
Right.
If you're a member of a recognized Indian tribe, American Indian tribe.
Right.
If you are a member of a healthcare ministry, so there's there's a ministry that you can actually pay your health insurance to, and it's kind of a shared thing. And so if you're a member of that you're out of the penalty. If you're incarcerated, right, or religious sect, right, it has to be a recognized religious sect, and it has to be, I think, more than 15 years old. Like, you can't make up your religion yesterday or something. If you're an illegal, you're exempt from the penalty. If you're homeless, I don't know how you prove you're homeless. Like, I don't know how they're going to mail you anything. Right. You're homeless. If you were evicted. If you have a shut-off notice from a utility company, not that they shut it off,
right,
just that you have the notice. If you have a death of a family member.
That's remarkable.
We ought to be able to dig up some
I know. That's what I asked you. I said, what is the lineage? Does it have to be your aunt, your uncle?
These are some of the exceptions. Fire, flood, or other disaster.
Wow.
Bankruptcy.
Blizzard.
If you're caring for an aged family member. Let's see. Let's see.
That is so...
Okay, there's no extended Medicare in your state. That's another exemption. Your health insurance was canceled and you can't afford it. Okay, and it couldn't be because you quit paying it. It had to be canceled.
So, I think about when you take money out of your pension, those exceptions are very tight. These exceptions that you're talking about are very loose.
Flimsy.
Yeah.
Other hardship, whatever that could be. Stub my toe. You have large medical bills from a previous year. And another one is that your child was supposed to be covered with health insurance that lives with you by the other parent, and they didn't pay it. Or the other thing is you thought they were going to get Child Health Plus, and they didn't qualify. So those are part of the exceptions to penalty. And so what you want to make sure is if you're coming under those penalties, you want to make sure that you would fill out the form for exemption to penalty. And that would be on an individual basis based upon your hardship.
So don't just fall and pay the penalty. My goodness, those exceptions are vast.
Right. So I'm Esther Golias, the tax lady from EG Tax. We're going to take a short break, and then we're going to join you on the other side with all of your phone calls. Where do you find these from?
I don't know.
That isn't a song.
I've heard this before.
All right, who is this? All right.
That is the B-52s.
Oh, the B-52s. Okay. I'm Esther Golias, the tax lady. We want to help you with your tax situation. If you have any questions, give us a call in studio, 8030930, 8030930, star 930 cell phone, toll free, 1-800-616-9236, 1-800-616-9236. And we have Ray from Fredonia. Hey, Ray.
Yes.
Is it snowing there?
No, it isn't.
What?
Sunny out. It's
What?
sunny out. Beautiful.
It's like terrible here. It's like a snow globe.
Oh, that's for sure.
Well,
Did
and
you guys
if you're
some
calling,
snow recently? Did you get some snow?
Oh, yes, this, last night.
Yeah.
About
wow.
5 inches.
Okay. Well, then that's good.
You got a
Turnabout
pass.
is fair play. How can we help you, Ray?
Okay, I have to fill out a Schedule F, and I have a loss for tax year 2014.
Okay.
And line 36 says A, all investment is at risk, or
That's right.
Part B, some investment is not at risk.
Right.
Can you explain what
Sure.
that means?
Okay. So let's say that, well, first of all, they're not going to let you take a loss against other income if the money that paid the expenses that generated the loss did not come from you or from a debt that you legally owe. So, for instance, if you have a farm, that's what a Schedule F is. So you got a farm, and let's say your mom says, Ray, honey, I would like you to grow watermelons. So you take my charge card and just go get all the seeds and everything. And by the way, you don't have to pay me back.
Oh,
Okay? Then the loss that you would have, the bills that you would pay for, the loss from the farm wasn't due to money that you put up, but it was money that somebody else put up. And so therefore you aren't at risk for the expense, and you can't deduct it.
Okay. So now I have put up all the expenses myself.
Okay.
Okay. So, but it's still
All right. Then there's
telling
one
me-
other. Then there's one other thing
had
that we
to-
have to talk about.
Manage it. And
Well, I mean, there's two things. The expenses have to be ordinary and necessary. They have to be your expenses paid with your money. And number three, you have to be trying to make a profit. Where it's really sticky with businesses like a farm or a self-employment is that many people are doing it as a hobby. Especially, my husband loves to farm. I mean, he really likes to go out and grow stuff.
Chris and
don't
I have
know.
an alpaca.
Yeah, they have an alpaca.
And
But
so
anyway,
I can't-
but if you're just having a farm because you really just love to see things grow and you're not really interested in making a profit and it's really kind of a hobby and it's really not your main way of making income, then that's also a problem.
Okay. It's not my main way of making income. However, this is the first year that I've had a loss in all the years that I've
Oh,
had.
well, that's great. Well, that's great too because that would show that it was a profitable venture, and the IRS couldn't say that you unless you've changed your thinking, the IRS would not be able to prove that you were not trying to make money because you've been making money. So as long as it's your money, Ray, paid with your expenses, you're trying to make a profit, you're good to go.
Okay. Now, but it also says I have to fill out a Form 6198, which asks about simplified computation of amount at risk. So all of that is actually zero for me then.
Right, you don't have to do it. As long as it's all your money, you don't have to fill it out.
Oh, okay.
Okay?
Sounds good.
Thanks, Ray.
Thank you very much.
Stay warm.
I will.
All
Goodbye
right,
now.
bye-bye. I'm Esther Gulius, the tax lady from EG Tax. Love to hear what you have to say, your comments, questions. 8030930, 8030930, star 930 on a cell phone. I know we have some other phone callers holding, but I want to talk about COBRA. You know, when your employer terminates you or you terminate employment, they give you the option of staying on
Right.
their health
Right.
insurance for like 18 months.
Cobra has been around for a
Long time. And a lot of people, I'm sure there's people listening that are on COBRA. Well, the market, if you aren't in the marketplace, then and you're on COBRA, two things are happening. Number one, you're paying more for your insurance than you should, probably for sure. And number two, if you were entitled to what's called the premium tax credit, because based upon your income, the federal government was going to give you a subsidy for part of your health insurance, you can't get that unless you're getting the insurance through the marketplace. So what I'd suggest you do is to you can go to New York State of Health. And for those of you listening in Florida, you can go to the healthcare.gov at the Internal Revenue Service and take a look at just how much the marketplace health insurance would be. And by the way, it's still your Blue Cross Blue Shield, all your regular Metropolitan
Fidelis,
Life,
First Choice,
right? It's all the
Independent
big
Health.
insurance policies, and you're going to find that you're going to pay less. And if you are entitled to that premium tax credit, if you are not in the marketplace, you won't get it. And that seems really terrible to me. So let me give you a real example. Let's say somebody's paying $600 a month for their COBRA,
Correct.
which is $7,200 a year. And they lost their job. And really, for all intents and purposes, they're not in the same economic situation as they were before. Let's say because you have no job and no way of making any money, technically speaking, you would qualify for Medicaid. If you were in the marketplace, they would pay all of your health insurance. Then when you get your job, then you go in and let them know. But once you're on Medicaid, they let you stay on for the year.
That's right.
And you get free health insurance for the year.
And
Now, if
there's
you
no
stay on COBRA, you're going to pay more, and you're not going to get any subsidy.
And I think the deductible on Medicaid is zero. Is
Zero, right.
Zippo, nada.
Right.
So it's a really, really good way. So if you're in that scenario, just give us a buzz and we'll show you the prices.
I mean, I
got
to tell you something, and it blows my mind that I'm talking about insurance.
Yeah.
But it's part of your tax return now, and it just, so that's number one, the COBRA thing. And you can go, like I said, to the New York State of Health or to the healthinsurance.gov and take a look at the other options, because COBRA may not be a good. And same thing if you're with the chamber. If you're not in the marketplace through New York State of Health or the healthcare network for the federal government, you cannot get the premium tax credit. So.
Yeah, because I know when you get that packet from the chamber, it always says all the benefits, and one of them is that they have insurance deduction cost reductions. But if you get your insurance through them, you don't get the subsidy.
Right. Another thing we talked about yesterday is small business owners can get health insurance at a discount if they go to what's called SHOP,
the marketplace for small
businesses, and another way to save money. And again, if you need help with that, EG Tax can help you. And by the way, when you go to file your return this year, if you're somebody that went to the marketplace, you can't file till you get the 1095A form.
Right. That's exactly right.
Because you cannot file till you get your and the state of New York is not going to send them out till the end of January.
Or you could by January, the end of January, go online and get it from online
if they have them out.
Right.
All right. We're going to go to the phone and we're going to talk to Larry from Georgia. Is it cold in Georgia, Larry?
Well, honey, it's cold here, but honey, thinking of you, I always keep warm.
Larry, shucks. What can we do for you, sir?
Well, first I have to say, am I correct if I hear Tiffany said she's raising alpacas?
No, she has an alpaca.
We have one alpaca, and so it certainly wouldn't qualify for a business or a farm. But we have an alpaca.
And she will give it to you, Larry, if you would like the alpaca.
It makes really nice fur every year that we shuck. We don't really shuck it, but we use the fur to do nothing with.
And they pay this money every month to feed this alpaca. Would you like an alpaca, Larry?
No, but thank you. No.
All right, what can we help you with, Larry?
Esther, okay, quickly, a couple of fast questions. One, I sold some investments I had. I had some all-dividend investment stocks. I bought in 94. As part of my consolidation, I sold them recently. I just wondered the expenses. I know I can deduct them, but I wondered, do I have to itemize my deductions in order to deduct my investment expenses?
All right. So here's the thing. If you have expenses for sale, that would go to the basis of the stock. In other words, if there were sales expenses, then that goes to the basis of the stock you sold. So if they charged a brokerage fee to sell the stock, that goes to basis. If it's investment expenses to keep your investments going, like you belong to an investment club newsletter, and you get the Wall Street Journal, and you belong to one of the numerous kind of financial planning sources, and you pay for that, that's a miscellaneous itemized deduction limited by 2% of your adjusted gross income.
Okay.
And then, Larry, don't forget when you do the cost basis for those items that you sold, that you add back any of those reinvested dividends, and you add that to your basis, so your basis grows and becomes larger.
And your gain is smaller.
Okay. Esther, thank you so much.
Thank you. Stay warm. I'm Esther Gulius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. And let's see, what else did we want to talk about?
We talked about employer-provided health insurance. We did that.
Starting this year in 2015, employers have to provide health insurance if they have 50 or more full-time equivalent employees, which would mean 30 hours or more than 30 weeks.
Correct.
Okay.
And there's a penalty if they don't.
And the penalty is $2,000 for each employee that isn't covered. And if you are offering, as an employer, poopy health insurance, and your employees are contributing more than 9.5% of their household income to their health insurance, they can legally leave you, even though you're providing health insurance, and go to the marketplace, and then your penalty is $3,000.
And I said to you earlier, well, geez, that's terrible. They better get insurance for their employees. And you said, well, not necessarily.
Really. I mean, as an employer who's paying health insurance, I pay way more. I mean, my family coverage is like $12,000 a year. Right. So if I just wanted to be a not nice person, I would pay the penalty and let everybody go to the marketplace.
Correct.
But instead I pay everything. So, but those are coming into effect. But if you're an employer who isn't paying anything, like maybe you're a McDonald's or something, and you have a bunch of part-time employees, Anyway, I'm Esther Golias, the tax lady. We're going to break for news. We'll see you on the other side. Now, I know that song. What song is it, Tyler?
That is Shapeshifters.
Good old Shapeshift. I need some Shapeshifters. I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on a cell phone. And Tyler asked a serious question
on the break.
While we're on break.
Sometimes I do that.
Yes. What did you ask?
I was wondering how far, what any kind of issues I might run into. I'm turning 26 in February, and
you said you're going to have health insurance until February.
Yes.
Right?
So I was wondering, when a penalty would kick in. Would it not be till
so
next year, or
in New York State?
Mm-hmm.
You can be on your here's something. This is New York State now.
This is
29
yeah.
Up till age 29.
What a great state we live in.
I'm telling you.
Well,
it's
the
just
way
wonderful.
you led into that question, the first thing you did was ask him how old he was.
Right.
Because I knew where you were going.
Yeah, because it's 26 up to 26 on the federal, but on New York State it's up to 29.
How about that?
So now you can get older and be happy.
My dentist will be so happy.
I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on his cell phone. And Bob has been waiting so long. Hey, Bob, how are you?
I'm fine. How are you?
Good. What can we help you with?
Yeah, I got a question for you.
Yeah.
My wife works for the state, okay? And she gets laid off, and she gets health insurance from April until December, in the middle of December. And then it runs out because then you were talking about COBRA.
Uh-huh.
And to pick up COBRA, we're talking $1,568 a month for both of us.
Uh-huh.
Can't afford that.
Okay.
So we don't have it for that time. We go to the clinic.
Okay.
So we have insurance from April until the middle of December. Am I going to pay a penalty? Are we going to pay a penalty?
So you have insurance for 9 months, right?
Yes.
You won't pay a penalty because if you have insurance for 9 out of 12 months, that's an exception to penalty.
And how do we, when I come and see you, because I come and see you every year.
Okay, there's a special form. There's like 4 extra forms this year. One form has to list everybody in your family, all the months they were covered, and that's one form. Another form is if you didn't have insurance, there's a penalty. Then another form is the exception to penalty, and you'll come under the exception to penalty. So it's just something we'll do automatically.
So I think he's going to get the penalty form, but then the exception
and then you get
is
the
gonna,
exception
is
because you have health
penalty.
insurance for 9 out of 12 months.
Okay.
All right.
Thank you very much. Have a great
Thanks,
day.
Bob.
Wow.
Thanks for waiting
and that
so long.
COBRA is a fortune that he would have to spend to pick that up.
Right. That's absolutely true. And
Yeah.
that's why if you're somebody that in his situation, he just goes
to the free clinic, which is
right.
a good idea. Yeah.
Right.
But geez, what if there was a catastrophic situation?
I know during those 3 months.
Yeah.
Right. That's true. I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on a cell phone. And the other thing is with this health insurance, if you're somebody whose income is less than 433% of the poverty level, it's higher in New York State than every place else, then you get what's called basically it's assistance from the federal government, okay? And they basically let you guess at how much your income's going to be for the next year. That's what they base it on, guesstimated income. Based upon that guesstimation, the federal government kicks in X amount of dollars per month to help you pay health insurance. Then when you do your tax return, it's kind of like going to confession. Now it's you can see what it really is. If you got too much subsidy from the federal government, then you have to pay it back. But here's the rub. If you're a lower income person, even though you might have gotten a subsidy that might be $6,000 or $7,000 too much, all you have to pay back is like $700 of it. So in essence, you're rewarded for making that gigantic mistake.
Wow.
It is just unbelievable. You can't believe
There's
this
not
stuff.
many things
I'm
in
telling
life
you,
you
I'm
can
really
do that.
glad we got to read the law after we passed it.
Yeah.
Okay, let's go to Jack in North Tonawanda. Hi, Jack.
Yeah, just a
Hey,
question.
hi, Jack.
How's it going?
Good.
On those question on Series E savings bonds, after 30 years, you cash them in and they pay the interest on them. Is there any way to avoid paying taxes or putting off the taxes on those?
Well, you could pay taxes as you earn the money every year, but it's still going to be taxable. But once you cash them in, all of the interest is going to be taxable on the federal. But the good thing is on New York State, it's not taxable at all.
Okay, there used to be something called, I'm not sure, they made them called H bonds, where you could just turn them over.
I know,
into
but they
H
don't.
bonds.
Those are you can't roll them over anymore. That's been
can't
about
do it.
7 or 8 years ago. That was gone.
So the only thing you can do is claim them, and you have to pay taxes. You can't avoid it.
That's correct.
Okay, good advice as usual.
Thank you, Jack. Bye bye.
And don't forget the bonds are not taxable on the state of New York.
Right,
So
correct.
don't forget that, Mr. Jack.
Okay, let's talk to Mr. Jim in North Tonawanda. Hey, Jim.
Hello.
How are you, sir? How can we help you?
Just wondering, Esther, you're going to be doing my taxes in March, and I need to know what do I have to bring in to prove that I had health insurance.
Okay. We need the names and the number of months of yourself and all people listed on your tax return that is going to be a dependent. So we need to know, like, for instance, if yourself, your wife, and maybe 2 kids, maybe one of your kids.
It's just me and my wife.
And did you get it through the marketplace or did you get it in a commercial venue?
My company pays for it.
Okay, so that's easy. But now let's say that let's say that it's yourself and your wife, and you have 2 kids, and maybe one of the kids is 17 and working part-time. Then we also need to know the amount of income that kid made, because that goes into what's called your household, your tax household income for computation in the event that you wouldn't have health insurance for them. Or maybe you had a child that just moved out and then moved back in, and maybe for part of the year they didn't have health insurance. So you need to know the number of months, and did that other member of your household have income? We need to put that into the household income computation.
Okay, but we don't have any kids.
Then it's just you and your wife, and it says Dee Dee on your W-2. You're good to go.
I'm going to need some extra caffeine this year.
Okay.
Okay.
All right, Jim.
I don't have any proof that I
No,
that I
your
had. I just
W-2 is
said
going
I
to
had
say
it.
it. Your W-2 is going to say it. So
Oh,
that's
okay.
you.
Okay.
You don't have a
Thank you.
problem. Okay. Thank you, sir. Let's see. And we got Ann. Hey, Ann. How can we help you?
Hi. I had a question. I'm retired, and I have a moderately low income. And this year, I finally had my workers' comp case settled from a few years ago, about 3 years ago. And I wanted to know, do I declare that or what? It was a moderate, small amount, but I didn't get it done immediately. I had to get a lawyer to fight for me because.
All right. So you had a workers' comp settlement.
Yeah.
And Tiffany, give her the good
That
news.
is not taxable, my dear, and so you are going to be happy about that. So,
Okay. Do I have to show it any place
Nope.
on the?
Not taxable. Nope. Now, is that
my.
your only source of income?
No, I have Social Security
Okay.
and a small pension from.
how much
where I
is
work.
your pension every month?
Pardon?
How much is your pension every month?
About 500.
Okay. So you don't even have to file. You don't have any job or anything, Ann, right?
Right.
Now,
And so since you don't have to file, you are also exempt from the penalty for health insurance.
is your pension a disability pension?
No, it was a one-time thing from an accident
Okay.
at work. It was a one-time, just.
Now, we're not talking about the workers' comp thing. We're talking about your pension.
Oh, I'm sorry.
Is it a disability pension?
No.
Okay.
Because the reason why is if it was, you could roll it up to wages and then possibly you'd get the
Get an earned income credit. Right. But it sounds like in your situation, you don't have to worry about the penalty for Obamacare, and you don't have to file, so you're in good shape.
Okay.
Okay?
Well, what is the limit for what you have to be under in order not to submit a
Are you married or single?
single?
And how old are you, may I ask?
72 and a half.
Okay, so that's about 12,000.
She said you was single?
Yep, single.
So we got 62 and 1,400. I'm doing my math. 76 and 34, 10, about $11,500.
I said 12,000, yeah. So
you're good to go.
That doesn't include Social Security. So
right. So no taxes due.
Oh, so it doesn't include Social Security?
Not taxable, no.
So that 12,000 echelon does not include your Social Security. So you, like Esther said, are good to go.
Okay?
Okay. Well, you know what? Every year I have to pay a lot of money, and I never could understand
It's not
why.
based on what you're telling me. You shouldn't have paid a lot of money. Did you have any other sources of income before?
I had a part-time job about three years ago, but I got laid off 2 years ago.
Okay. Well, then, since the job, you should not have even had to file.
Really?
Right.
Call me on Monday.
Yeah, call us, Ann, so we can talk specifically, okay?
Oh, I will.
Thank
you very much.
Our phone number is 632-7886.
Thank you very much.
Thank you, dear. Bye-bye.
632-7886. Bye-bye.
Yep. I'm Esther Gulius, the tax lady. We're going to take a short break. We'll see you on the other side with your calls. 8030930 star 930 on a cell phone.
No music.
No music and whatever. Should I hum? I can hum. I'm Esther Gulius, the tax lady. 8030930, 8030930 star 930 on the cell phone. And we're going to go to the phones. And Sharon, how are you?
I'm well. How about yourself, Esther?
Good. What can we help you with?
Hey, I drive by your office on Airport Pulling Road pretty often, and usually I ship my return off to Michigan because that's where my accountant is. Do you think you could take care of my return this year?
Oh, my gosh. We have a CPA, an enrolled agent. We have a lady that speaks Spanish. I mean, can we take care of you? We certainly can.
Absolutely.
And we're right in Naples, right across the street from Tamiami Ford.
And we know all 50 states, so Michigan is not a problem.
Yeah, so
Okay,
and not to mention how we have a coupon in the paper, and the starting fees are $25. I don't think you're going to be able to see a CPA for $25 anyplace else in this world. So
No,
yes,
that's excellent.
Good.
So make sure you
Yeah,
call
so
us.
make sure you call us. By the way, the phone number
is 239-862-2009. Again, 862-2009.
Right. Okay.
Thank you so much.
Thank you. Well, that's cool. Somebody from Florida
is
giving
so
us a call.
neat.
I wish I was in Florida this very minute. Oh, well, I love Buffalo. All right, we're going to go to Julie. Hi, Julie. How can we help you?
Hi, Esther. Thank you for taking my call.
Good.
I'm calling with the situation our son has. He went on the marketplace last January and through his county offices, and they put him on Medicaid and United Healthcare.
Okay.
Does he have to file this Form 1095A?
He's got the 1095A is a reconciliation form between the marketplace and what actually happened. So yes, he has to do wait for the 1095A, and he has to do his reconciliation with what he said to the county and what in actuality happened. Now, if he got too big of a subsidy, then he might have to pay back part of it.
Okay. So even though it's Medicaid, there could have been a subsidy involved? Is that
Well, you see, the Medicaid is the biggest subsidy. It's like the Cadillac of everything. He doesn't have any COBRAs, any co-pays, anything.
And you said it was Medicaid, and another one was bridged on the top of it, didn't you, Julie?
Yes, United Healthcare.
Yeah, but so let's say that, to go on Medicaid, basically he said he had very low income, projected income. When he does his tax return, if he had projected his income was $15,000 and he ends up with $25,000, he might have to pay back part of the subsidy that he got for the Medicaid. And that'll be all on the 1095A.
All right. His situation is that before the turn of 2013, before 2014, he ended up unable to work with a medical issue, and so he hasn't worked all of 2014 except in the summertime he tried to go back to work, and he worked for about 6 weeks, and it just wouldn't. He couldn't.
Okay,
he couldn't
so
work. And
all right,
at that
so
time,
for everybody's benefit, had Julie's son made more money than he'd projected, then when he went to the reconciliation between what the marketplace provided and what actually happened, where the credits are given or the penalties are incurred or the taxes are paid back. But in her case, in your son's case, he was totally disabled almost, and he didn't make more than he had projected. So when you do the reconciliation, he'll be fine.
all right. And then what also happened was when he found that he couldn't work, he was advised to apply for SSD. And that just now has started to kick in. Is he going to owe taxes on SSD?
No, he won't.
Oh, all right.
And
okay,
actually, is he living with you, Julie?
No.
He's living on his own?
Yes.
Okay. And he doesn't have a wife or anything?
No.
Okay.
He has two children.
That live with him?
They spend half of each month with him.
Okay.
It's on a rotating basis with his ex-wife.
Okay, but she is the custodial parent. She's the one who they use her mom's address on their school records and doctor records, right?
Yes.
Yeah.
And
So
it's her health
so
insurance.
your son is out of the woods altogether, and I'm sorry to hear that he's not feeling well.
Thank you very much.
All right.
Okay.
Thank you, Julie.
And I have just one question for myself. When you sell a home, is that capital gains, does that go on your income side? For instance, when you go to pay taxes, is that considered income?
Julie, how long did you own the home, may I ask?
32 years.
And is it your personal residence?
Yes.
Okay, so good news is you don't have to declare the income. Are you married or single?
Married.
And so unless your gain is more than $500,000, you don't have to declare it, so it doesn't go anywhere. They changed it a few years ago where it doesn't even go on a Schedule D, so it has to go nowhere as long as it meets those criteria that I mentioned.
Yes.
So
Thank you very much.
good news all the way around.
Thank you very much.
Thanks,
for your
Julie.
help.
Bye-bye.
Okay.
Let's see. And I'm going to go to Bob in West Seneca. Hi, Bob. How can we help you?
Hello. Thank you for taking my call.
Yeah.
I started receiving Social Security disability, and they said that since it's because my total income on that is below $25,000, that they don't take taxes out each month. But do I have to pay tax on that?
All right, Bob. Are you a married gentleman, single?
Single.
All right. So is your primary source of income just the SSD?
Yes.
And you have no other, you don't have rental property, small business, nothing like that?
No.
Then you don't have to worry, because unless half of your Social Security is more than $25,000, none of it's going to be taxable, so you're fine.
Oh. So I won't be paying anything then?
Nope. That's why they aren't withholding anything.
Oh, because I thought a friend of mine told me that even though they didn't deduct anything each month, that income tax time that I will have
Nope.
to pay something.
If this is your only source of income, Social Security is tax-free unless it gets to half of your Social Security added to your other income exceeds $25,000. Well, in your case, you're nowhere near that, so you don't have to worry about it at all.
Okay. Well, I had one more question.
Yeah.
I now have to. I started paying for my own medical insurance through the marketplace. And I received a subsidy on that, but the person that does my income tax sent a form saying what I need when my time comes to do my taxes, and said that I might have to pay back some of that subsidy.
Well, your Social Security is going to count in your marketplace in the computation of whether or not how much your subsidy should have been. Okay, but number one, you won't be penalized because you don't have to file a tax return. But number two, when you projected how much income that you were going to get when you went to the marketplace, did you put down your Social Security?
Yes.
Then if you were fairly accurate, your subsidy should have been right on, and you won't have to pay anything back.
Oh.
But if you want to see what it is, you can go to our website at egtax.com and play around with the figures. I think you'll find that you're not going to have any problem at all.
Oh, okay. Okay.
Okay?
Yeah.
Thank you, Bob. And let's see, we got Julie from Lockport. Hi, Julie. How can we help you?
Hi. My mother's been living with me for the last couple of years. She's 89 years old. She may have to go into a nursing home, and I'm wondering if it would be a really good idea right now for her to gift us the maximum amount of money so that wouldn't necessarily have to go into a nursing home fee.
Julie, I was going to chime in here. And there's something called the 5-year look back. And so that means that if mom's going to go in the nursing home soon and she gives you guys the house, they're going to look back, and that's within that window. And so that plan won't work.
Won't work. Because
well,
you can't just, Julie, you can't just give away money just before you go into a nursing home and think the nursing home's going to pay for it. There's 5 years, like Tiffany said, that they look back, and if you gifted away money, that money is going to be used for her nursing home expenses.
Okay.
Okay?
That's what I wanted to know.
All right, thank you, dear.
And
Bye-bye.
then, Julie, don't forget, if she is a private pay and she pays the bed tax, that's a possible adjustment, something you get back on your tax return.
That's true.
So
the bed tax is a refundable New York State credit.
Right, so don't forget about that if you guys are a private pay.
Okay, and we got Maria. Hi, Maria. How can we help you?
Hi. I was just calling because I just lost my job in February last year, and I picked the COBRA insurance. So is that one of those things that I can be entitled to that new health insurance credit?
Well, no, it's very interesting. We were just talking about that. If you aren't in the marketplace, then even though you might have had a subsidy, had you gone to the marketplace and you went to the COBRA instead, you aren't going to get the premium tax credit. What I'd suggest you do is go to and I know we've got to wait for open enrollment again now. So what you're going to have to do is go to the New York State of Health and apply in the marketplace so that next year, if you're still unemployed, you can get that premium tax credit or a lot of subsidy, and you're going to find you're going to pay a lot less, and you're going to have similar insurance.
When is open enrollment?
That starts in November.
Well, it just closed, and in November, I think November 15th is when it's going to be open again.
Right.
Okay.
Okay?
Well, thank you.
Okay, sorry to give you the bad news, but I'll tell you, better late than never.
Right, exactly. Thank you.
Thank you very much. I'm Esther Golias, the tax lady from EG Tax. All of our offices open this Thursday, the 15th. The IRS is open for business on the 20th. I will tell you, if you're somebody that's been in the marketplace, you got to wait for the 1095A. If you got an unemployment, you got to wait for the unemployment forms, or you got to go onto those websites before the end of the month and see if you can download them, because to file your tax returns without the accurate information is going to do nothing but hold up your refund. So, and refunds, again, they're promising are going to be kind of slow because with the new Obamacare part of the law, it may hold up your refund. But to get ready, you want to make sure you have all of your income, and that includes what I just talked about. If you sold stocks, even if you didn't think you sold stocks, if your broker did something that was called balancing, that really is a sale. You got to make sure that all goes on there. You want to make sure you got all your deductions in order, all of your adjustments. If you're an itemizing taxpayer, take a look at all the things for itemizing, including the sales tax, because that's deductible as well. And if you need us during the week, we're at egtax.com, and you can call us during the week at 632-7886. And until next Saturday, I'm Esther Golias with Tiffany Fabian. Have a great week. Bye-bye.